Hey, I'm Hayden, and today we're going to be talking about the P&L Playbook. We're going to answer two main questions today with this. The first one is when to implement the P&L Playbook. The second one is who is the P&L Playbook for? So for starters, on when to implement this, you might be wondering, are you too early, too late, or just on time? The quick answer is, if you're still working on market validation, understanding what your product is and your service offering and working on refining that, it's going to be too early for you. You need to just put your head down and focus on validating the market and the offer first. Once you've done that, and that's typically around $50,000 to $75,000 a month in revenue, this is really the time that you want to implement the P&L Playbook, primarily because this is going to be your guide for growing and scaling your business. So, what is the actual P&L Playbook and who is it for? This is going to be for service-based companies, entrepreneurs, startups, founders, even to medium to larger enterprise businesses. It's going to be for anyone who's done for you, done with you, online courses, coaching, consulting. It's not going to be for real estate, not going to be for a dealership. For all those service-based industries, it'll be perfect for. So let's dive into what the P&L Playbook actually looks like. We're going to start off with gross profit, and everything's going to be based off of that. That way you'll see that as you grow, it's always going to be a percentage of whatever that is. So if you're $100,000 a month, $1 million a month, the percentages always are going to apply. So you'll see at the top, after gross profit, we start off with client acquisition. That's going to be how you put your service or product in front of the clients and actually get them to commit in buying. Then we'll dive into fulfillment, and that's going to be all the labor that goes into it, whether it's yourself, employees, contractors, etc. From there, we have these overheads. That's going to be pretty much everything else in the business broken up into fixed overheads, variable overheads, and business development. And we'll talk about that at a later stage. And then we end up with a nice net operating profit of 30% pre-tax. Taxes, unfortunately, we have to pay the government a portion of it. That usually comes out to be about 30% of your operating income. And so effectively, though, that's going to be 10% of gross profit. That leaves us with a nice 20% profit margin. Now, let me go back up into client acquisition and fulfillment and why this is so important. We call this our golden ratio. Collectively, they make up 55% of our gross profit. As you're growing and scaling, if you're not in this range, it's going to be very, very difficult for you to continue to grow your business, and it's always going to be a pain point for you. Oftentimes, it's a balancing act between client acquisition and fulfillment. If you have a fulfillment-heavy team like done for you, you're not going to rely on heavy client acquisition costs, but collectively you want that to be 55%. Again, this is a general litmus test. This is meant to be a playbook and a guide for you as you grow. The overheads, we like those to be about 15%, and ultimately between all these things it's supposed to give you a reference point for where to dive into and what questions to start asking. If you're above 55% for that golden ratio, ask the question, well, why is this? Is my marketing not good enough? Is my fulfillment not efficient enough? Am I not pricing my product well enough? And same thing for the overheads. Why are your overheads so expensive, or why are they so low? Is it actually scalable? The big thing with all of this is we want to be running this on the cash basis, and the importance of this is because cash is king. And so if you're not managing and measuring your cash on a regular basis, you're not going to actually be able to take control of it. And so with a 20% net profit, you're going to continue to add 20% of top line revenue into your bank account. So if you make $100,000 every month, the goal is to have $20,000 in your bank account growing month over month over month. And the big piece of this is that allows you to really mitigate risks and take advantage of opportunities. If you don't have enough cash on hand, it's going to make it very difficult for you to actually optimize your business, and you're always going to be beholden to whatever the market's doing at that time. So now I hope you can see the importance of having a P&L playbook and the foundation that it sets for you as you're going to go into growing and scaling your business, which we'll cover in future modules.